Hello everyone and welcome. My name is Tim, trader at the Calm Compound, a company of professional traders where we show you how, why, where, and when we invest. Let's get right to it. Today we are going to talk about Bitcoin and Ethereum, of course, because today is our crypto day, and Bitcoin and Ethereum show us where the rest of the market is going. Now, I also want to take today to do something a little different than usual, as I want to talk about some of the indicators that tell us if a recession is coming closer. Because I think that will be useful for you and you can check them yourself when they come out. First things first though, let's have a look at Bitcoin here on the daily chart. We talked about how Bitcoin is in this range and how the longer that takes, the more wild and violent the next move will be. So where will that go? Now, for now, Bitcoin is still very much in a bearish position. However, we might see a move up to 30,000 first. There's a couple of things that we want to digest here. First of all, this range between 26,700 and 28,800. That is the range that we're currently working with. Over the past 2.5, almost 3 months by this point, we have been in a bearish divergence. That is the price going up, but the relative strength going down. The longer this takes, the more bear pressure forms on the market. We also have this great overhead resistance, like we've been talking about for quite a while now. And we also see that there has been a couple of topping tails, and there's some bearish price action happening in general, and that there is a slight upward trend in this range. Generally, you would say that that is a good thing, but after such a spike up, that generally does mean that bulls are not actually able to continue their momentum. Now, what we see if today manages to close above the start of yesterday, so let's say at around 28,350 to 400, then we could see a shortfall in this range. That means that the bears were unable to bring it all the way back down and the bulls are gathering some steam again. This is why it could be that we see a poke up to 30,000. However, because of this major resistance, there's only a small chance that we will actually break through to 32,000 and possibly beyond. So what we are planning to do is at 30,000 we will add to our short and then we will keep waiting. This would be invalidated if, for instance, the RSI really went up above the 80, screamed upwards, and that would kind of like reset it back to neutral somewhat. We also want to see Bitcoin keep that 30,000 for at least 7 days to show that it has now made it a support. If that works, then we might just be able to break the back of the bear properly and slowly start to transition into the next bull market. Notice that this is still a very big if. So don't get all excited just yet. Keep the FOMO under control. Just know that these are the parameters that we're working with. And until that happened, we are still facing the possibility of moving back towards 24,200 and possibly the 22,000. All right? Good. So that is where we currently are. For now, there's still a lot of bear pressure on Bitcoin, but we might just see that poke up, and then we'll see if we can actually hold it or not. That is the case for now. Then, if we look at Ethereum, it's actually doing quite well. It might even be front-running Bitcoin a bit at the moment. That means that we have this resistance right here in Ethereum, and what we see here is that Ethereum has really worked its way to weakening the resistance because it's been hit many times. And today it does look like, knock on wood, don't jinx anything, but it does look like Ethereum is getting ready to break through. We've had this little shortfall here, what we just talked about. It means that the bears were unable to bring it back to its recent or its logical low for the pattern, and that bulls are kind of picking up some momentum again. If that works out, we might just make it all the way up to 2,000 approximately. That is kind of the next area that you're looking at, and that's also where we would probably be adding to our short for Ethereum. So that is that on the Ethereum side. If we do manage to break out, then we want to make sure that tomorrow we confirm. So just this candle is not enough to say we're going to have another leg up. We would need tomorrow to also be a green candle and not to immediately revert back. And preferably we would also see somewhere along the next couple of days a retest of this resistance as a support and then continue up. That is what we're looking at. That is how we know that it is a sustainable potential move. On the other hand, generally speaking, when Ethereum leads the charge and leads the move up, it is not as sustainable as when Bitcoin does it. So this is not the optimal course of action for the market. Keep that in mind. It's important. That is, though, the main feeling in the market right now that we have. So it does look like we have some updrafts ready to form with an overarching narrative of there's still a good chance of breaking back down. So that is what we're currently looking at in the crypto market. Keep that in mind for your own sort of trading strategy that you have ready. And usually we would go over some of our own positions, but I want to take you somewhere else today. If we look at this new watch list that I made, especially for this video, here we have iron, just good old-fashioned iron ore. Why is that important to look at? Well, because there are a lot of fears about recession at the moment, about economic slowdown, and of general hard times to come, especially now that the banks are showing to still be banks and not be trustworthy. I want to give you some weapons that you can use to keep track of how things are going. The idea was that once China reopens after its COVID lockdown, then all the pent-up demand of China will stimulate the economy enough to bring us out of a rut and to kind of get everything going again, and then we will all be fine. However, despite the fact that the Purchasing Managers Index, which means how much was bought for a certain industry, in this case services in China, as we see here, has gone up. 50 is generally neutral, under 50 is it shrank, and above 50 is it grew. So we see here that the purchasing grew, so that means that the economy is kind of strengthening again, right? Well, yes, but that is for services, for things we do for one another, and not necessarily things that require a lot of buying stock, for instance, like manufacturing would. So that is what you can see here in iron, because China is a very big consumer of iron, of gold, of steel, that kind of stuff. So if it really was reopening and getting ready to basically pull the world out of a rut, then the price of iron and copper and steel, etc., would also have to grow fairly quickly. And we see that that is just not the case. We have these downtrends running, and we have these lower highs consistently forming, meaning that there's even a bit of compression. If you look at it like this, if you see this as an outlier, there's a bit of compression, and we could even fall quite a bit, because this is 217 to 90, so that is quite a tumble of, let's see how many percent that is. That is here, price range there. That's about 60%, meaning that if we fall out of this compression, we could fall another 60%, and from a 90 that is quite intense, all the way back to these lows here in 2015, which makes sense. So that is what we're seeing here in iron, and that is something that you can keep active track of, especially also the PMI. If you're interested in that kind of stuff, you're tradingeconomics.com. You can just see all of this for free. Every month it's updated, and you can see that on the economic calendar of Trading Economics. It looks intense, but it's really not that bad. Now, we see that here in iron that it's not really going great. We kind of see the same thing in copper, as we are unable to reach our previous highs. Also, the all-time highs, at least that I can tell, since 1999. And copper is of course very important in a lot of things, because, well, copper wiring, etc. It goes in pretty much anything. So the fact that China reopened, we had a bit of a move up, but not really sustainable, and now we're kind of sagging off again, shows that there is probably not that much aggregate demand at the moment, not enough to really pull us out. So we do still have to keep the idea of a recession in our minds so that we can properly prepare for it. Same thing with oil. Now you see that there has been a strong move up. You may have heard something about OPEC and the BRIC cutting production, but the reason that they do that is because there's not that much oil demand right now. So the best way for them to keep the price up and to kind of keep their own, well, it's a big calculation, but to keep their own profits up, they had better cut, because otherwise you have oil storage or you have surplus, and that is not good for your market price. So that is what we're seeing here in oil as well. This is currently on the weekly chart. If you look at the daily chart, you see this sudden spike up from like 75 to 80. We had a bit of a drawdown, and then OPEC was like, no, we don't do that here. That's not happening. We are now back at the resistance, but you do see oil is the fuel for the machine. If manufacturers are not running, you don't need as much fuel, and we're seeing that happening right now. Also means if there's no demand, then the economy kind of comes to a standstill. So that is why also more layoffs are expected. So here's your heads up. Please, make sure that you are prepared for such a situation over the months to come. We will see. There is a case to be made that the Fed will pivot its rates in the next 90 days, or 3 months approximately, but that is never something that you should completely count on. Be sure to be diversified, and prepared is the name of the game at the moment. And the same thing kind of with steel and natural gas. And gold, of course, does its own thing, but with the uncertainty, you do see that gold is spiking up again. And with that, it is slowly moving towards its third tap. So here you have 1, 2, and then possibly 3 here for another move up and another bull run in gold. So that being said, last thing is that we also have the United States manufacturing PMI. That's the same thing that we just talked about, but then instead of services here in China, in the actual manufacturing base of the US, and you see that that has been under 50 for quite a bit, and it is expected to again turn down in a week or something when the news numbers come out around the same time as the CPI numbers. So it's a bit of a technical video today. Hopefully this was still interesting to you. Hopefully you've learned something, and hopefully I've been able to add a couple of tools to your tool belt where you can keep an eye on the future and prepare. Thank you so much. I will see you all in the next one. And in the meantime, don't forget to keep calm, keep cool, and keep compounding. Bye bye.